Hi, this is Drew Tignanelli. This is our July update here in Maryland in person.
Notify the tax collector.
Look at that. I couldn't fake that if I wanted to. No, don't notify anybody.
Don't tell anybody.
That's okay. They can come check it all they want. I work hard to make sure that I abide by the laws of the state of Maryland. And anyway, we're here on the July update. You know what that means.
What does that mean? 4th of July? Oh, I'm sorry. It's the birthday edition.
Birthday month.
You know what? I guess I'll go get a box.
Go repent somewhere. Put sackcloth and ashes on in the back room there. But that's okay. You know, it's July, it's birthday month, and we're here with our July update. So anyway, markets are, positive for the most part.
A strong quarter.
It's been a weird week or two. All this stuff in Russia and everything, it's fascinating how the world twists and turns on a daily basis, And
it's interesting to watch the market react or not
react, But, that's what I keep trying to tell people is that markets have already thought out events of the future and they probably got wind, more than likely. Markets had already got wind months ago that something was on the horizon because, the whole controversy between Wagner Group and Putin and so forth had been talked about.
I taught myself how to say his name.
Well, I can't say his last name. What is it?
I've forgotten. But I did. I was like, I'm going to say his name correctly.
It's Prigozhin or something like that.
Yingvi. Anyway.
Yeah. Anyway, we're not here. Anyway, the markets are doing okay. Nothing over the top at this point in time. I haven't seen any moves that would make me say, wow, these markets are pushed off. Usually when you see a bull market, Mike, what happens is you see this incredible volume and you see this underlying rising tide of all stocks.
Yep.
Even if they're not great stocks, they're still going up.
The money that left the market comes back into it.
And all of a sudden people are buying anything and everything because they don't want to be left behind. But anyway, there's some good things happening in the economy.
Yeah. So some things we're looking for in the birthday month of July is the end of this month is going to have a lot of earnings reports from some of the companies that have made up the most significant portion of this market uprising. I mean, one of the things to notice about this last quarter and this year has been the fact that the tech sector has really made up for a significant amount of the growth. So we have a lot of tech sector earnings reports at the end of the month. Interest rates are always a focus. You know what? As I said to you earlier, Jerome Powell has done an amazing job of making sure nobody has any idea what he's going to do.
I don't think he knows what he's going to do.
Well, he probably, if he's doing this job, he probably doesn't know until he does it. But anyway, in the past month, we had our first break. The rates did not go down, but rates did not rise at the last Fed meeting. But the next day, he went to Congress and said, "Oh yeah, I'm going to raise rates again."
Yeah.
So we'll wait and see. But oil's down 37%. That's been a huge thing. Never feels like the gas price goes down as much as the oil price does.
Well, it always, when wholesale gas prices are going up, they raise it quickly and they tell you, wholesale, I don't know what I can do. But when the wholesale gas price starts coming down, they don't tell you very quickly.
Yeah, we still have some uncertainties in the East, but overall, the market doesn't seem to be showing any major concern. And we've got little bits of good news, such as an increase in housing construction. So,
yeah. So overall, I don't think you should be overtly bearish. I don't think you should be overtly bullish. And good diversification always works in times like this, as markets have been constantly proving, because the international markets are actually doing reasonably well right now.
Yeah, Japan, I think, really.
Japan is the star by far. It's up like 25% this year, and it's one of the reasons why you want to make sure that you do have some international exposure. The last 8 years or so, the U.S. has been the dominant market, but normally you get a reversion to the means. And if you ever looked at that, if you ever look at a chart and you see when the U.S. has outperformed the international, that there comes a period where all of a sudden it flip-flops and the international performs the U.S. and then it goes back. So you've had this outperformance of the U.S. You need to be thinking a little more international. So anyway, again, nothing great, nothing bad. So let's
Yeah.
go on to some of our financial planning topics.
So one of the things we want to talk about, and I know this is a little Maryland centric, especially that's Maryland centric for your Maryland visit.
Yeah.
529 plans is something we talk about all the time. 529 plans can be an amazing way to help save for your children or your grandchildren's college education, sometimes even your own.
Yeah.
But in over the past 2 years in Maryland, there's been a lot of controversy, and I got to learn to turn my phone off. And so anyway, one of the things to know about Maryland 529 plan is it has two parts. It has the prepaid college trust, and it has the Maryland College Investment Plan.
Right.
And there was a controversy in 2022 last year.
Well, I think it started actually in 2021.
Well, they figured it out in 2022. Yeah.
Right. And they figured out that there was a problem in 2022. And a lot of people mistake that 529 plan in Maryland is a bad thing. It's the prepaid plan that's the problem. It's
Right.
not the investment fund. The investment fund is just mutual
T. Rowe.
funds and stocks and T. Rowe Price, and there are no problems with that,
Yeah. And if you're one of our clients and, we've advised you on a 529, about 100% of the time, we've advised you to go into the investment, not the prepaid.
About 100%. It
About
was 100%, Mike. I never advised anyone. If they said they wanted to go into pre-plan, I'd say, here's my problems with it, but if you want to, feel free.
I don't like to work in certainty, so I was getting a little bit of
just
in case. So anyway, so what happened in 2021 into 2022? What happened was, they switched software providers, and in 2022 they realized that the software had incorrectly attributed interest to many accounts. Now, some of these accounts in 1 year doubled, and that should be a red flag. Some of these accounts, maybe it just went up a little bit more than it should. But again, only the prepaid side of it, and the Maryland has abolished the 529 board that was responsible for the plan.
The prepaid plan.
Yep. And they've abolished any new prepaid plans. You can't open a prepaid plan anymore. And they've transferred all the assets to the state treasury's office, and the state treasury's office is handling how to divvy out that 1.1 billion to the various account owners, and allowing them to essentially convert it into the investment plan. So the thing is, if you are out there and you signed up for the 529 prepaid plan, which we didn't advise you to do, but you did have that, it's important to go ahead to the Maryland Treasury and file a claim. Claims can be filed now through December 31st of the year. So, and I'm sure if you do have one of these plans, you've been getting lots of mail about it.
Yeah, and you should be doing that. But again, the reason we've never liked the prepaid plan is that they ran into trouble in 2001, and they almost had a collapse, because the prepaid plan is basically trying to assess what the future cost of college is going to be in the Maryland school system. And that's what you're investing in, is the inflation rate of the future cost of schools. So that takes actuarial assumptions. Anytime you throw actuarial assumptions into something, you run a risk that you don't do it well,
Right.
which they didn't. Twice.
And got abolished.
So anyway, we like the 529 investment plan, where you put your money into either money market or bonds or stocks, or they're just going to do a combination of bonds and stocks for 5, 10, 15, 20 years when your kid's getting ready for college. And there's no problem with the Maryland investment 529 plan. Now, here's the key that I wanted to really talk about the 529. There are some cool new strategies with the Maryland 529 plan, because they're now allowing, Mike, for you to do Roth contributions from a 529 that's been in existence for 15 years or more if you didn't use the money to go to college.
Yeah.
That brings in a whole new level of thought process. In addition, If you've got a child going K through 12 or to college and you didn't do a 529 plan in Maryland and many other states, Pennsylvania also, you can do a contribution to a 529, take it out in 2 or 3 weeks later, still get a tax deduction and send your kid to college, even though you didn't get any benefit out of the 529, you got this tax benefit
deduction
by just doing some administration. One week you set it up, put some money in, 2 weeks or so later, you take it back on, you pay your tuition, and voila, you get a $5,000, or in Pennsylvania, you get a $10,000 tax deduction.
So on that, a lot of people listening might think, well, hey, my kid's bill this year is going to be $15,000.
Yeah.
Should I just do the $5,000 I can get a deduction?
You do the whole 15, because in Maryland you get a carryover for 10 years. That means you'll get $5,000 per year for all 3 years, the next 3 years, because you did 15,000 in, 2 weeks later you took it out. Boom. It's a $5,000 per year tax deduction. And in the state of Maryland, Mike, that's equivalent to like $400 for the next 3 years. That's $1,200. Is it worth $1,200 for your administration costs?
Yeah.
Me and you, we'll do it. We're cheap, Some people don't think it's worth $1,200 to do that, but you and me, we'll do it. We'll take that cheapness.
Absolutely.
And it's true in other states don't always give you the carryover.
Yeah. So you got to look.
Pennsylvania doesn't give you a carryover. It's $10,000 per year per child, right? Virginia, I don't believe, gives you a carryover, but other states do. So, and some states don't have any benefit, right?
Right.
Like California doesn't give you any benefit, even though they're a tax state. Florida is a tax-free state, so you don't get any benefit, right? Delaware doesn't give you any benefit, even though they're a taxable state. So you have to look at it state by state and see, does your state offer a benefit and how long is it for? And then you do it. So anyway, there's a lot of cool new strategies coming up.
Unfortunately, I think we have to deliver some bad news.
Which is?
Well, some of our clients may have already gotten the bad news from their insurance carrier, but we are seeing an enormous rise in premiums for homeowners and auto coverage.
Yep. And people have to understand that it's logical. Let's take the home first, right?
Yep.
You've got home costs are up. You've got lots of natural disasters, wildfires and hurricanes and tornadoes, and that costs the insurance companies money. And if you have to pay, the roof that cost $10,000 a year ago is now costing $15,000.
Yeah, but you got to think about all the building materials that the insurance company has to buy to rebuild your house and how much more they have to pay the construction workers.
Yeah, so don't get mad at your insurance company. Understand that it's logical, but some insurance companies will take advantage of it, right?
Oh, yeah.
Because they're assuming that everybody said, all these natural disasters and all the costs. So it's only logical my company raised my premium by 50%. Other people will say, okay, I can understand that, but I'm going to at least check to see if there's somebody. I did that. My homeowner's premium, Mike, went from like $3,000 to $6,000 in 2 years. And my agent was sitting there saying to me, well, and I said, that's fine. You either try to get me some other quotes and show me that there's no one better out there, or I'm leaving. Well, next thing you know, he came back with a 50% reduction with a new company called Frontline. And I looked it up and they were a great company. And if I didn't press him, he was going to just let me sink, but I'm not going to get into that.
Yeah, let's bury the grudges. So, but here's the thing. I know that we've told our clients in the past, hey, it's important every few years to requote your insurance. My guess is that most people don't necessarily do that because they don't want to go through the effort. Well, if you haven't done it in a while, this might be the year for you actually to make the commitment to go ahead and to do that requoting. Check those
if your premiums have really taken a big jump.
And another thing is, if the insurance company that you're currently with, if you see a lot of advertisements, if there are sports arenas with their name on it, if they have really great CGI characters that promote, you're probably in one of the insurance companies that you could be getting a lower rate. I know there's a company out there, NGM. I've never actually quoted them, and their whole advertising scheme is playing with that. but I'll say my insurance company doesn't advertise.
I didn't even know my company existed until I got them and
Right.
looked them up,
And
and they were a great company.
One of our favorite regional companies. I don't think I've ever seen a
No, they don't advertise, you know.
So
So anyway, you want to be looking at your auto and home insurance now if your premiums have taken big jumps. And when I say that 25, 50% over the last year or two, you want to if they've gone up 5 or 10%, you're really just going to have to accept that's logical with what.
Yeah, but it's always a good time to get.
It's always good to reconsider.
As we talk about the reason for these cost increases, one of the things you brought up is wildfires. And we've had wildfires, we've had floods. There are certain parts of the country that have a lot more of these events than others. And you had an experience with your home in your part of the country where you have flooding and hurricanes a lot, that the insurance company offered you a service to help mitigate your risk.
Yeah, so my company said, okay, here's your new premium, but we also want to do an inspection. So they sent this guy out and he walked through our whole entire house, outside and inside, for about 2 hours, went through the whole entire house, came back and said, I want you to just replace these 2 pipes, like there were one's attached to a toilet, one was attached to the washing machine. He said they were corroded to some degree and it could easily break and cause flooding in your house. And I said, great. Now he could have come back and said, hey, your roof is a real problem. It's not really built the way, and it's going to cost you $25,000 to replace your roof. I'd have been kind of upset, but I'd rather have known that.
Right.
That would have been a great thing to know.
Is it better to have your insurance company pay out on a flood claim for a bad water hose on your washing machine? Or is it better for your insurance company to say, hey, could you spend $100 and have somebody replace that water pipe and not go through the flood?
Yeah, I think I spent $165 and did those 2. And, to me, it was a welcome relief to know that they looked the house over and said, these are the things that could cause you extra harm in the future. And I'd much rather spend a few $100, even if it was a few $1,000s. I'd rather spend that than take a chance that something happens. And next thing you know, we're displaced for who knows how long.
Now, in fairness, there are a lot of people that have an extreme amount of negativity towards this idea of an insurance company doing an inspection. And there is an aspect to that. So there are laws, depending on which state you are, and that if you go to sell a house and later on there's a problem and they can prove that you had been made aware of the problem and you didn't disclose it, you could have liability. So there's certainly some information behind the people that would be really skeptical of this, but in Drew's, in my opinion, we'd rather just know that we have a problem and fix it.
Yeah, and I would probably feel bad if I tried to sell my house to somebody. It's just my nature. I'd feel horrible trying to sell my house if I knew there was something physically wrong anyway. So I wouldn't want to live there, and I wouldn't want somebody to do that to me, and you reap what you sow, Mike. So I always try to make sure that I'm sowing what I want to reap,
Absolutely.
Anyway.
Well,
so
happy birthday.
It doesn't work anymore, Mike. You missed it at the beginning. So so try to redeem yourself by the end of the 31st when the actual birthday is here, right? Anyway, this is Drew Tignanelli saying God bless.